Hey guys, it's been around 2 weeks and a bit since making my last video on the 20th of February, and you can see my title suggested a push to 72k and then a nuke to 52k, and obviously I went through a couple minutes of analysis. You can see the 20th of February was this bar right here, and we pretty much pushed past 72k, we went to 74k, and we flashed one of my favorite reversal signals, a failed rally into the 50-day TMA from the underside, followed by 3 consecutive closes underneath it. Now, obviously, if you waited for 1, 2, 3 consecutive closes underneath it, you would have opened short at 68k. So you would still be in around a $2,000 profit per Bitcoin. But if you entered using the TIA strategy, specifically Michael's strategy, using the Gann swing indicator, where you are long or short on a swing direction change, which would have happened at the bottom of this bar here, you would have been able to go short around 70,470. Your other option was to front run this trade at $72,600 on this daily close underneath the 50-day TMA, which obviously the next day could have just been a continuation. And I did say to the TIA Discord that you could short at around 72.6 because your invalidation is pretty much any daily close above 73.6, which would only have been around a $1,000 risk per Bitcoin. And obviously, given the current state of the economy and everything, it's very unlikely that you would see a 20% up candle out of nowhere. Like, we did not see, any huge green bars that would have absolutely liquidated your shorts since pretty much the middle of October when we saw that snap back out of the 10/10 liquidation day. But anyways, that is our recap. So what am I thinking now? Do I still think we see a move down to 52k? Now let's start on the monthly time frame. You can see last month the monthly BX trender closed red for February, and it looks like it is going to show continued selling pressure for March unless we see a ridiculous reversal this month. Having a quick look at the previous cycle, if I drag this across a bit to make everything look a bit nicer, I'll pull it through to potentially here. Anyway, I've dragged that a bit too high. We love using trackpads, but anyway, you can see the 786 to 828 fib for last cycle from the low to then the all-time high, the cycle high. The 786 to 826 fib, the smart money zone that Peter DiCarlo talks about in Traders Helping Traders, pretty much stopped the market dead on this first capitulation, the lunar crash. Was that? Yeah, the lunar crash. And again, the FTX collapse pretty much marked the low almost to the dollar. Give about a couple of percent. So if you guys remember correctly from some of Jason's videos over the last few weeks, he's been talking about a potential Bitcoin low in the high 30s to low $40,000 region, somewhere around this consolidation region here, and last cycle's lower monthly swing top before the collapse. And I think based on last cycle's analysis, that is still quite possible to happen. Like, a buy zone from, let's say, $34,000 up to just over $40,000. Like, even if you bought the absolute worst price in that consolidation zone last cycle, say $25,000, you probably would still be pretty happy. You're still hundreds of a percent in a profit. And if you've sold anywhere up here, you'd be really happy. But anyways, let's not get sidetracked. So yes, I do still agree with Jason Pizzino's bear market low price targets. But what do I think the next move is going to be? You can see once we broke underneath the 50% level last cycle, we obviously saw a capitulation. Then we got bought back up, followed by another capitulation. And it kind of looks like this is what happened last month. We got a capitulation, we got bought back up, And we're probably on track for another capitulation that comes down to the 50-month triangular moving average, which right now is sitting at $56,000. Now, if you watched Michael's video today, this one, he talks about the exact signal that he's watching for to suggest a low to mid $50,000 price target. I'm not going to ramble over his analysis because you can go watch his videos. I'm not going to waste your time. I agree with it for the most part. And one thing that I do find slightly interesting is we have actually broken below the market bias. So if you now, I've changed the settings to 3388 because that's what THT community has done instead of using 2088. Doesn't make a huge difference, but it does cut out some of the false signals and give you a bit of a cleaner trend. So whether you choose to do that or not is up to you, but I obviously like to stick to tried and tested strategies. So if they change it, I'm going to change it. But one thing to note is since we've already capitulated underneath the market bias, it is potential that this was last month and this big reversal here is potentially this month, which means that instead of seeing the capitulation this month, like I suggested with my previous analysis, we would see the capitulation next month. And it wouldn't be a straight clean move down because you can see here, after all these flush out bars, you know, everyone who wanted to sell had already sold. So yes, the market did go lower, but it kind of just grinded lower. So that is also something that could possibly happen if the low doesn't actually end up being, 30 something thousand dollars. We could just see, next month come down to, break the low at $60,000. Maybe it forms a slightly higher low at $62,000, and maybe it takes 4 or 5 more months to slowly grind down to, $52,000, $56,000. But being a monthly time frame, we're looking at obviously longer term moves. And before I wrap up on this time frame, just note that no matter which one of these theories does play out, I don't think the low is in. Jason doesn't think the low is in. And the monthly BX trender does not suggest the low is in. Because even though last cycle it only fired long at $23,000, you had 1, 2, 3, 4, 5, 6 entire months where you weren't holding a long-term Bitcoin position. That's 6 months you could have been trading stocks, commodities, or just holding cash in the bank and getting interest. So that's something Peter DiCarlo over at Traders Helping Traders has been talking about a lot recently. Like, to not invest when the monthly BX trender is red for the long term. Like, obviously, there's still swing trades on the daily and weekly to be made, but when the monthly BX trender is red, even if you don't get a huge sell-off and you just get a sideways grind, you're tying up your capital for not much profit. Like, you can get in on the breakout and ride a multi-year bull market. Anyways, enough rambling there. Weekly time frame is a little bit interesting. You can see last week we had an absolutely disgusting looking candle that is usually suggesting a further move down where you see a huge wick up but a pretty weak close. It did close green though, and the weekly BX trender actually closed lighter red, which if we have a look, even just a few weeks before, once you get that light red close, it tends to result in a pretty decent rally. We got about 15% into the bottom of the market bias. And if we do get a rally from here until the market bias, I know obviously it's unlikely to shoot up in just 1 week. Like last time it took 1, 2, 3, 4 weeks. So if we go 1, 2, 3, 4 weeks, that'd be the end of March. And if the market bias comes down a bit, we could, rally into $80,000, which would be the previous swing low here, $80,000 to $84,000, and into the bottom of the market bias. So that obviously is a possibility. And that's the slightly more bullish scenario, looking at the monthly, just looking at the monthly bars and timing that I went over at the start of this video. So it is a possible scenario. And if we look back at last cycle, you can see when the weekly BX trender closes light red, it often does lead to next week pushing up a little bit higher or a multi-week move. Now, if you're of the bearish case, which I went over, then that would mean after the move, we would see a pretty savage sell-off. Now, if you're of the slightly more bullish scenario, saying that most of the selling has already happened and price is only going to go a bit lower, maybe mid 50s rather than the high 30s, you could be thinking that last week was actually a 4th of July 2022 style week where price didn't push much higher, it went 10% higher. So if we go 10% higher from here, $72,000 to around the 50% level. But price kind of just went sideways for months. And obviously we still got that sell-off at the end. But as Jason has been suggesting, the price low could be close. Obviously, the monthly time frame takes precedence over the weekly time frame. So the monthly BX trender is still red, meaning that going with what Peter DiCarlo has taught with his strategy, the BX trender strategy, it's not his indicator, but he uses it very, very well. When the monthly BX trend is red, just don't expect clean long-term trends to the upside, like hundreds of a percent move. Even double-digit moves should be treated with suspicion, as we saw here at the end of last year. So yes, we could get a rally into $80,000, and the precursor to that rally would be the daily time frame. Now, if you watched Michael's video from earlier today, which I actually have watched, just not on my Polkadot account, on my personal YouTube account, he's watching for a higher low on the Gann swing indicator on the daily time frame above around $71,000. Now, obviously, we did not see that last time. He was saying if we got a higher low above 71K, we could potentially push to 80K. And that higher low above 71K would probably have resulted in some daily closes above the 50-day TMA, which we also did not see. So if we see that this time, which I think is actually slightly more likely than last time due to the weekly BX trender closing higher low and the 50-day TMA coming down to around 71.2. So if we get that higher low above 71K, it's likely to result in one of my favorite signals, 3 daily closes above the 50-day TMA, which often results in at least a more significant push to the upside. More likely double digits and single digits. So time looks like it is a bit more right for this move than this last push here. So if we do get that, I will obviously be going long. Now that does not mean I'll be closing all my shorts. If you got in on a good short at, $90, $100, $110,000 and you still have that open, hopefully having taken some partial profits, I'm still gonna keep my short open. Obviously, you do you. I will just be throwing a shorter term long trade in for this, potential $8,000, $9,000 move, because just because the overall trend is down doesn't mean there aren't good long trades to be taken. Now, one thing I am concerned about is the daily BX trender closing dark red. Now, if you do a little bit of backtesting yourself, most of the time when it closes dark red, if price is also underneath the 50-day TMA, it often results in a pretty savage sell-off. Now, you can obviously just have a quick look at what happened through January and February. But one other interesting thing to note is if I pull all the way back to 2022, if you bear with me for a moment as I scroll. Now, obviously, because I'm on just TradingView Premium and rather than one of their pro softwares, the Gann swing indicator does not have enough bars to be displaying this far back, but that is okay. We're only looking at the BX trender. Now you can see after a extended period where price moves sideways and the BX trender is green, once you start to get that dark red close, even if price action is still making higher lows, as soon as you get that breakdown with the BX trender dark red, whilst underneath the 50-day TMA, we got that absolutely savage sell-off. Now from that close, sorry, from the open of the next day, so today's open at $29,000, price in just a couple of days sold off nearly 30%, and obviously consolidated a little bit and continued to sell off. So this is a signal that I've been stalking for a few weeks now, because I just think it is such a important warning sign that when you're getting so much buying pressure on the daily BX trender, but price is chopping sideways, and then you get that reversal signal, not reversal signal, that bearish signal, it just has me on red alert. Now, speaking of red alert, we've got this nice fourth time breakdown setting up. So if price in the next few days comes back to this 64.3-ish level, and we break below it, and we get a daily wick to test it from the underside, which we saw last cycle. I didn't point it out when I scrolled all the way back there, and I'm not going to scroll all the way back there again. But if we get something like, a lower high underneath this trend line on even a 1 hour or 4 hour time frame, we could be setting up for the capitulation that marks my more bearish scenario on the monthly BX trender. So now is definitely the time to be paying absolute attention to the market. And if we just have a look at this Fibonacci, which I have no idea what the hell happened right there, but from this last rally, we've got the 4 hour 50 TMA that lines up almost perfectly with this 50% level. So it is possible that after this huge volume sell-off, which is even more apparent on your 1 hour and 15-minute charts, just look at that volume. Like, the last time we had volume like that on the 15-minute chart was when we got that breakdown from $70,000. But yeah, like, it is possible that in the next few hours, days, maybe this week, we rally into 69.6. And remember what Michael says, any rallies up to around $71,000 should be treated with caution, especially if it's on declining volume. And, if we do get that signal, it is definitely a meaning that my more bearish scenario is probably going to play out. That English in that sentence was absolutely abysmal. The other possible scenario is we get some sort of reversal that doesn't last very long. So maybe Trump says something. Maybe, the news about the Iran and oil, which caused this dump, reverses and they reopen the Strait of Hormuz or whatever. And we see a strong push up to this 786 to 826 fib level around 71, 72K. And we see a sharp rejection. And that would set us up to make a lower high on the daily time frame. Again, most likely below the 50-day TMA. Like if we get a wick above it, but we're not able to close above it, which set up this end of January, start of February absolute capitulation. If we see a scenario somewhat like that, it would give confluence to the 4 hour and daily bearish scenarios and obviously support my monthly sell-off scenario. Now, I have rambled a lot in this video, but there's just so much information to talk about and so much like backtesting on different timeframes to talk about as well. So I definitely think now is the time to really pay attention to the market, because it looks like a huge move is potentially brewing. Like, especially if you look at this entire range here. Like it's pretty much getting tighter. Like that is a terrible way to draw it. But you can sort of see it looks like a big bearish pennant, and we've had this failed move up, which actually looks a lot like what happened in October last year, where we had this massive bearish pennant after obviously the 10th of the 10th capitulation day. We had this failed move up, price held the previous lows, made higher lows, we broke down, retested from the underside, and just the rest of is history. So if we do start to see any sort of weakness, I am definitely going to be going max short. Anyways, that's it for today. Thank you all for watching, and I'll try and get a stock video pushed out in the next few hours, but please like, comment, and subscribe. Goodbye.